So I think she has mentioned about my past. So being alumni, it's always good that to interact with the current batch of students. Second session with I am Indore. Visited I think 3 years back, delivering a similar lecture with the EPGP batch, a classroom session with Professor Sundar. That was a good experience, and then followed by few other IMs also. I am Lucknow, I am Ahmedabad, giving lectures on the M&A topic. So apart from my job and the hobbies, this is something I like to pursue from both way. Like giving a session is also a lot of interactions, a lot of feedbacks, a lot of learning from my side also, which also keeps me abreast with the latest thing, probably how to tackle the situations, how to answer the questions, etc. It's just not a one way. I also learn a lot from these sessions, and that probably one of the reasons which keeps me always engaged in giving these sessions. Considering that this is approximately 50 to 55 minutes of session, so what I will try to focus is on the consulting part of the M&A, not mostly on the theoretical part, because theoretical part anyway, we are learning as part of our curriculum. So even though I will focus, what happens in the M&A, some of the latest topics, but my focus will be if someone is interested in M&A consulting, like just passing out of the institute, or someone wants to make a career in M&A consulting or consulting, I will try to give you a view of what generally happens in M&A consulting, so that you can also get a view at what are the scopes, what are the players in the M&A consulting world, what Big Four does, what the strategy firm does, what the investment bank does, and that might also help you to understand the entire landscape and probably where you might like to look for an opportunity in future. That will be one of my focus, along with giving the lecture. So any like anything about M&A consulting, anything where you need to make your career, etc. I will be happy to answer those questions beyond the topic one, which I will be going through in the next half an hour or so. In case you have any question, I think feel free to stop me. I'm not sure whether I will be able to see your hand raising, but you can just speak through, so that I'm aware that someone wants to ask something or wants to highlight something. Otherwise, I'm not sure whether I will be able to know if someone has any questions. So this is how I want to run the flow. As said, post EPGP, I started my career with M&A, and for last I think probably 10 years or so, almost doing M&A. Mostly on the tech side, but this focus of this discussion won't be on the tech side, but just to give an overall view of the M&A. Some of the topics, because currently I'm with Accenture Strategy, I think it's mostly aligned with the Accenture's view. But in my previous lectures, etc., I was with Deloitte and EY, and focus on that. The content is, like I might have taken content from Deloitte, EY, based on my learning, etc., which is available in the public. Nothing is confidential. So these are all public, are all in public domain. So feel free to, like, if you want to, take any screenshot or something, feel free to go ahead and do that. Nothing confidential in that. So with that, I think let me start, with a view of what I will, showcase today. So I will go to the agenda of the next 30 to 35 minutes. So what I will, these are the 4 areas, which I will touch through, So the first will be, I will just, set up a context how the M&A currently looks like, because that will set up, some of the hypotheses, how the environment looks like, how it is flowing, how it is growing or, decreasing, etc. Then the next will be, in terms of some of the M&A trends. I have just highlighted a couple of trends, that will be in focus for the coming year. And you will see that, both the trends are, driven by technology oriented. And then, once the trends are done, I will focus on, the key M&A playbook, like how the M&A playbook is, getting refined, getting modified, etc. And then the major focus, which will be of also of interest to the current set of students, will be, what happens in M&A consulting, right? What are the players, what we do, some of the activities that we do based on your skill set, how you can get into the M&A consulting, etc. So that will be the focus. Before I also start, I think a couple of things I also want to highlight here. I think within M&A, there are, few areas, like one is, the pure play investment banking, which does a lot of valuations. So that is not the focus. This, that is done by the investment banking. The second part is on the M&A legal tax angle, so once the M&A is done, there is a lot of legalities, a lot of tax involved. That is also not the focus, so there's a separate team, within the M&A, which does, mostly the chartered accountants. The third part, which is just to create the strategy, at a very high level, which might be on, the strategy firm does, which might be very short exercise of probably 2 to 3 months, so that's the third part. That is also not the focus. The fourth part is, where the wide area of, M&A activities happens, which starts with, once, probably doing a screening, doing a due diligence, business due diligence, operation due diligence, HR due diligence. Then once the deal is done, helping them plan the deal in terms of separation, integration. And this exercise, sometimes run from anywhere between, 2 months to 2 years, kind of activities. Now, the M&A consulting is, primarily, focus on that part of the activity. So whatever I am focusing in this session is, related to that, which is M&A consulting, not M&A, costing, or, not valuation, not legal and tax, not pure play strategy, but actual M&A consulting, which caters to the entire life cycle, starting from target screening, diligence, integration, separation, pre-deal, post-deal, etc. So that is the focus, and so in case you have any question, we will try to focus on that area of the M&A life cycle, and not on valuation, not on tax, because that is not my core area. So let me start with the latest M&A deal activity, just to set the context, like how the M&A activities are flowing over the last few years. So I've taken, one, this is a bar graph, which I've taken from the merger market, that shows, how the M&A, deal has increased over the last 10 years or so. So if you see, there's a substantial focus on M&A during 2020, 2021. I think in 2021, it was quite high, almost crossing, 4 trillion to, 5 trillion globally. And then, suddenly you will see that, there's a decrease in the M&A activity. There are multiple reasons that, it has moved from 2020 to 2021, such drastic, movement, because of, the post-COVID, when the, the valuation of the company was, down, the capital was available very cheap, the rate of interest was very low, and that was probably, some of the reason, the drastic increase during the year 2021. And of late, you have seen that, during 2022 and 2023, the deal activity has, tapered down a bit. While there is no specific reason, there are multiple reasons of, this tapering. Some of these might be, high interest rate, high volatility, etc. The valuations are not, that cheap compared to, just post-COVID area. But, there are many unwritten, like explanation also. So even though the activity has slowed down in 2023, but hopefully, the projection is that from next year, this is supposed, to at least, pick up, probably to go to 2022 level, might not be 2021. But majority of the reports published by the investment bankers, the various big four M&A consulting firm, for 2024 has projected an increase in the volume. So hopefully, we are hoping that, the deal volume, the activities, will, pick up in the current year. Now, once this activity is picking up, hopefully, like what are the key trends, that we are, foreseeing, probably for 2024. So there are multiple reasons, like, that we do. Probably the valuation is cheap, someone is lying with a lot of capital, the private equity is having close to $2 trillion, just sitting idle. Someone wants to grow, just expand like across the value chain because of the supply chain issues, etc. So there are multiple reasons that might fuel the deal, but based on majority of or not majority, I will say many consulting firm, 2 or 3 focus areas stands out. Like this might be one of probably some of the highest reasons that we might see for 2024 in terms of the deal activity. So what are those reasons? If you see, two reasons I've just captured. This is across various consulting firms, various research firms. They are saying that these 2 areas will primarily drive M&A activity in the coming year and probably next year also. So the first one, if you see, is what we called something related to the government policies. There is a lot of focus on ESG. So how you can optimize your carbon footprint, etc. So a lot of M&A activities that we have seen in the last year, or so ESG factor has grown a lot in terms of when someone is going and buying a company, right? So they want to probably improve their carbon footprint, so they want to go and acquire some new technology or some ESG focused companies, like oil and gas companies are going into something green. There are this focus on the ESG, this focus on the carbon reduction will be one of the at least top 3 or 4 focus area when in terms of the overall number of deals. It might not be actually the volume of deals, because the ESG company's valuation might not be that large, but in terms of the total numbers, this might be one of the reasons. The second reason, that again, across almost all research and consulting firm that we are highlighting, is on the artificial intelligence. So a lot of focus on the artificial intelligence of late. So every company wants to optimize through artificial intelligence, be it a oil and gas company, be it a product company, be it a manufacturing company, be it a consumer goods company. Everyone wants to do an AI, and the best way to do is go and acquire a company who might be having latest AI technologies which you can quickly build or plug into your own environment. So there will be a lot of focus on the AI acquisitions. Last year also, I think AI was one of the highest, again in terms of number of deals, not in terms of volume, because these AI companies are not that high in valuation. So these are some of the primary reasons that is highlighted across for 2024 and beyond, which is apart from what we generally have, which is optimization or probably the scale or scope deals. So those parameters will also be there. Someone wants to grow horizontally in terms of and achieve scale, or someone wants to grow vertically and probably acquire new technologies across the value chain. But focus will be mostly on these 2 for the coming year. Now, in case the focus is for these 2, now the way you do the entire M&A life cycle, like I said, starting from your due diligence, starting from your planning, starting from your closure of activities, needs to change. So the traditional way of handling M&A might not be applicable, or might not yield that result, considering the changing dynamics of the M&A landscape, right? So focus is on these 2 areas. So considering that, what we are saying is the traditional way of doing M&A needs to change. We need to optimize. The focus will be different. So my next set of activities, or the next set of slides, is focusing on how we are changing the M&A landscape. What are the focus areas when we are doing integration, separation activities, etc. So I think this till now, I was just setting the base for my article. So I haven't reached my article, the focus area, but I just thought of just set up the base so that you understand how the M&A landscape is spanning out and what how it will span out in future also. Now, if you see technology, be it the AI or be it any latest technology companies, is will be the backbone of any M&A integrations separation in the coming year, considering the changing landscape of the M&A. Having said that, again, wants to reiterate the point that it is based on the number of deals, might not be on the size of deals, because these deals might not be on the larger valuations. But technology was there, I think, was one of the important factors for last few years, and the importance of technology is also going to improve, increase going forward because of the latest technology, be it AI or be it any other latest technology. So technology becomes focus, and now once technology becomes focus, your way you do the M&A integration, separation, planning, etc., also needs to focus on that. Like how you want to plan to that. Now, this is again a slide, which I've taken, which is based on our Accenture research in terms of, if you see the graphs on the right, it shows like, in terms of the number of deals across the various, verticals or, the various industries like communication, banking, energy, health. How many were focused on pure play technology driven deals? When I say technology driven deals, means these companies has gone ahead and bought a pure play technology company, right? So software and platform, obviously the company will go and acquire a tech company also. But if you say the banking, so 45 of or 45% of all acquisition in the banking industry was not another bank, but tech focused company or a tech focused bank, or a technology focus. Similarly, if you see on the energy, healthcare, so in the healthcare industry also, there are a lot of focus on buying tech focused companies, because the healthcare is getting reverse, changing, etc. The dynamics of how you manage the healthcare in terms of using the latest technology. So around 30% of the healthcare also, if you see, is focus on buying technology company and not another healthcare, right? So considering the large focus on tech focused acquisition, I think what I was highlighting in the previous slide, like technology will be or tech focused acquisition is one of the key areas. And if you see in the at the bottom, the average, almost 36% of all the deals that is happening is on acquisition of tech company. So when this so much focus on technology focused company acquisition, your way you handle the M&A needs to change. Like you need to innovate. How you optimize the integration or separation in whichever way you are want to plan. So again, this is setting up some of the or probably setting up the base, like why we are saying that your M&A playbook needs to change. Now, once the base is set up, till now I was just setting up the base, considering that some of the key factors, how it's changing, what was in the past, what was in the future, giving some metrics also. Now, now I will focus on, on the M&A playbook, like some of the things that we are seeing, or that we need to focus whenever we are doing an M&A integration. Now, what is a playbook? Now, you might not everyone might be averse about this playbook, or might not have heard about this playbook. So playbook is like again in M&A consulting, like how you approach an M&A strategy planning, integration planning, separation planning, due diligence, right? So we call that as a playbook. So how you will integrate two companies, like what are the focus you will have, how you will separate, when you are selling a part of the company which might not be aligned to the core. So for each of the areas we have a playbook, a set of activities that we generally do, or a set of focus areas that also you can call. And so the focus now is changing based on the trends that we are seeing in the past and that we will see in the future. Now, I will focus on few of the areas that how the M&A playbook is changing going forward. So as I said, like yesterday's playbook, what the way we used to do, deals before, long lead time, a deal might be running for 6 months, 12 months, going on, a lot of resources, going through a waterfall model, doing the integration first before any transformation happens. Once the two companies are like integrating, we will integrate first and then we will do the innovation, etc. And this integration and the separation also used to happen, between 6 months to 12 months to 2 years. The focus areas was also, quite different. Now, all those are, getting refined based on the changing landscape. So the previous playbook, whatever we have seen, might not be too relevant for the kind of deals that we foresee in the future. Again, if you see, again, setting up probably a little bit of base, there are two graphs you see, one is economy of scale and one is the growth oriented deals. So what we generally said is about the AI, ESG ideally falls in the growth oriented deals and not on economies of scale. So if you see of late, there is an increase in the growth oriented, deals, at least in terms of numbers. People are focusing more towards growth oriented rather than economies of scale. Economies of scale is still happening. I'm not saying that, it has decreased, but the focus is, how you want to grow, by doing an inorganic acquisition, right? Or want to plug, some of the missing areas, or, wants to optimize your landscape through ESG, AI, etc. So, based on our research of doing such deals, there are 4 areas that I want to highlight, which we need to inbuild or probably focus on whenever we are doing such acquisitions in future. And this might be not only applicable for this AI or ESG, but might be applicable also to a broad area of other deals. Even if it is a scale deals, some of the concepts which I will, or the 4 concepts that I will highlight, might even be applicable in those areas. So I will just go one by one. So the first is you need to have an M&A capability, because previously what we have seen is a company probably acquires one company in 1 year or 2 year or 3 year. Of late, majority of these large companies are becoming very acquisitive. At least in the smaller deals, so they might be acquiring 2 or 3, companies in a year or even more. So the previous way of handling M&A, like, when that one deal will happen in 1 year or 2 year or 3 year, and then you will bring the necessary resources of integrating or separating, might not give you a lever in case you want to, do such frequent deals. So you need to set up an M&A capability within your organization, so which will continuously work on various M&A setup. They will have their own investments, own people across the functions. So they might have their tech people who are doing one M&A of the after the other. So they might be having the functional expertise, like say supply chain, finance, etc., who are specialized only in M&A. So setting up a M&A team, dedicated M&A team across functions, who works only in M&A, is some of the thing, or some of the focus area that we have seen of late in almost all company. So like I was doing a integration for one of the largest CPG company, and for them, so they are also turning out to be very acquisitive, at least doing couple 2 or 3 deals. So what they said that probably 2 to 3 years back, they never used to have an M&A or a dedicated M&A team, but because of the rigor, because of the focus, because of the agility of late, so they are having a dedicated team, and their processes, their technology backbone, they are trying to streamline so that any acquisition that they make can be quickly plugged into. So they are trying to optimize the integration or separation timeline, say probably from 6 months or 8 months, based on the size, to probably half of the timeline. So getting the environment ready, getting the landscape ready, and be prepared is one of the, I think, major focus area that we are seeing in terms of preparedness for M&A. Because if you are not prepared, and if you invest in a company and if you take 6 to 12 months just to acquire that company, so there might be a lot of risk in terms of the people are leaving of the acquired company, so a lot of disturbance or hiccups during the integration process. To avoid that, people needs to have a set of processes, so that they can easily plug the company. So that's one first. The second is, a lot of focus again on, leveraging latest technologies in terms of, or probably during the entire M&A life cycle. So what we are seeing is, people are using AI to do a search for the target screening. Previously the target screening exercise used to be manual, where people used to, search across, through various or in collaboration with various research firms. Of late, we are seeing a lot of focus on AI in terms of, even in the process of target screening. And similarly, once the deal is done, the entire technology landscape is very optimized through, use of cloud, use of SaaS-based product, so that the integration of, which was taking 6 months previously might be happening in 3 to 4 months. So almost every company is, trying to leverage technology to a large scale to optimize the M&A landscape or, M&A playbook. So this is a second trend that we are seeing. The third is in terms of the agile integration. So whenever this M&A happens, this integration and separation processes take a lot of time, and during that time, the focus generally becomes on integration or achieving synergy, and not on value creation or innovation, etc. Now, if you focus, once you acquire a company, if you focus only on the integration separation for 6 months to 12 months, then you might be lagging, in terms of innovation during that period. So to overcome that, the approach of M&A, which was quite waterfall before, that focus is on first integration and then on innovation or transformation, is changing. So we are doing innovation transformation along with the integration. So whatever your innovation projects that is currently undergoing won't get affected, so that can continue, while your integration project can also continue. So doing an agile based approach in the entire process will help to not disturb the company when the two companies are getting merged. So that, because we acquired the company or such companies because of their fast growth, because of the innovative products, etc. And that needs to be, or the acquired company needs to be, very sensitive that those processes or, those innovations processes are not getting disturbed during the acquisition process. That's the third one. Now, the last one here is, on talent. Now, a lot of these tech-focused companies, be it the AI or be it the latest technologies, even in some part of from the ESG part, the focus, when one company go and acquires such companies, the focus is on the talent. That we are going and acquiring the talent of the acquired company, and based on the talent only, the valuation is reached. So in case during the entire integration or separation process, some of the talent leaves immediately after the deal, then that will have a direct impact on the valuation of the company, and will also impact the thesis or the deal thesis. Like, we are acquired a say an AI company of close to 500, and just after the deal, if 50 or 100 people leaves because of the hiccups or because of the uncertainties, that's that will have a direct impact on the amount of money that the acquiring company paid. So there has to be a lot of focus on talent retention, to make sure once the talent is onboarded, they feel comfortable, they are made aware of the new way of doing business, or sometimes we don't even keep them separate and not integrate them into the acquired company, so that innovation culture, the way they do the business, is still intact and not getting impacted because of some of the bureaucracy of the acquiring company. So a lot of focus needs to happen across the talent, so the HR integration becomes one of the key focus area. The communications, the change management, is a lot of focus of late on, these areas. So these are the four key areas, what we are seeing, or the way that we see is changing the entire M&A landscape. which will continue to go. And some of the learnings that we are seeing will also be, replicated not only in the, scope deals, but also might be replicated in the scale deals as, things get, progress. So these are few of the areas that we want to focus on. And based on that, the entire playbook or the way that we used to do the deals before are getting refined. So I think almost all the big fours, even within the Accenture strategy or some of the strategy companies, the way they used to do the deal before is changing. So nowadays, you will see most of the acquisitions are getting completed within 3 to 4 months or 3 to 6 months. Previously, it used to take 1 to 2 years. So you will see a lot of focus on talent, a lot of focus on reduction of timeline, etc. So and most of the companies, when they're going for acquisition, they're already ready. So the moment the day one happens or the legal day one happens, the acquiring company is ready with all the all the backbones just to quickly assimilate the company they are acquiring. So this is my the new M&A playbook or the new M&A strategy that I want to focus on. So that was the first part of my of this session. Now the second part is I think I want to touch on the M&A consulting part also, since many of you might be interested to know or probably wants to make a career in consulting, be it M&A or beyond. So what are the things that we do in the M&A consulting? And M&A consulting is becoming, I think globally, I think almost 20 to 30% of all consulting revenues comes from M&A for across the big fours globally, and it is getting replicated in India also of late. So a lot of focus in M&A consulting. I think many of the big fours, many of the strategy, be the Accenture strategy or the big fours, the overall chunk of work compared to the consulting or compared to other consulting work has increased a lot. So what are the things that we do, and who are the players in this? So I've just created a few slides just to give you a view of what things, what are the players, what we do, etc. So if you see, I will just start with a brief about the entire life cycle of M&A. Whenever we are doing M&A, what are the things that we are doing, and I've divided into two parts, which is again common across all the consulting firms, is the divestment and the acquisition. Generally, mostly it's two parts. There are a few other areas also, the joint venture, etc., which I haven't highlighted in this slide, but most of the activities falls into that. So when you want to, or in case someone wants to make a career in the M&A consulting, what are the activities that you will do? So if I start with the acquisition, which is the bottom part, we will say, we start with the target screening. So what we do in target screening is, we whenever we want to acquire a company, we want to identify, the various options in the market or in the landscape. So, we initially, figure out what is our focus areas, what is our geography, what is our, target of, or the revenue size we are looking for. And based on those various parameters, we do a target screening. We search across the landscape and we identify, many targets, probably 8, 10 based on, whatever the client is looking for. And once those 8, 10, target is identified, then we start getting into the detail of next steps. We analyze how it fits into the overall, strategy of the acquiring company. And then there will be one more filter from 8, 10, it might, come down to 4 or 6. And with the 4 on 6, we will, the client or the acquiring company will start getting into a negotiation. So to identify the entire process, this activity sometimes the investment bank also does. Sometimes the strategy firms also does, but mostly this target screening activity is done by either the investment banks or the big four consulting firm. Even Accenture, Kearney, etc. They also do a lot of work in this area. Once this is done, the next part is is on the due diligence. Like once you identified probably 3 to 4 companies that you're interested, you want to start the due diligence process, like whatever the company is saying is correct, will it grow, are the valuations are good, etc. And within the due diligence, there are a lot of sub areas, like financial due diligence, tax due diligence, legal due diligence, commercial due diligence, and then the functional due diligence. So tax legal part is generally done by a separate team who are expert in the tax legal side. Financial due diligence is done by the valuation team. Sometimes again is done by the big fours. The strategy and Accenture company does not get into the financial due diligence part because they don't have they don't have the license. It's mostly the big four who does the financial due diligence in terms of the valuation, or the investment banker does that. And once those are done, then we do a commercial due diligence where we try to understand the overall strategy, whatever, in terms of the growth, whatever they're saying it's, is actually true or not, how it fits with the acquiring company strategy, etc. So we deep dive into the complete company's health, strategy, focus areas, etc. And once this commercial diligence is done, then we might deep dive into few of the areas like the functional due diligence, which is my tech due diligence, which is my operation due diligence, which is my HR due diligence, where we want to go in depth and understand how my HR processes is, whether there will be any expected strike in case from the HR department, or from the factory workers in case the deal is announced, etc. So all those nitty-gritties are being assessed. So this is the due diligence phase. Once the due diligence proceed and the target has identified and both the parties agreed, then the deal is closed and we start integration and separation planning, where we design the integration plan, like how we will integrate, what will be my synergy targets, what is my deal thesis, are we going to integrate it into the acquiring company, or we will keep it separate based on the deal thesis, is it a scope deal, is it a scale deal? Based on that, I need to identify the various functions that needs to be integrated or kept separate. And when will be my legal day one? Legal day one is the day when the actual deal is legally supposed to get closed and both the companies will become one company. So this is one of the, I think, one of the longest poll in the entire process. It generally lasts between 3 to 6 months. And here some of the skill sets that we require is like having a very good understanding from a strategy perspective, because whenever you're planning the integration, you need to understand the deal thesis. That's one area. And the second area that we look for is functional expertise, like someone with who is coming from supply chain domain here to MBA, or who has a very good supply chain understanding, so that person can understand how to integrate, etc. Someone who is coming from a tech background, the person can understand how to integrate the technology backbone, etc. So a bit of strategy as well as functional expertise is required during the close to integration planning. And once the day one is happened, then there is a post close and the value capture, where we do any activity that is pending from at day one, because not everything can be done by at day one, considering the short timeline in terms of future synergy capture, how we can optimize synergy, what are the value drivers, etc. So that generally happens in the post close. Again, the skill set that we require in these areas is again a deep understanding of the function in like either say supply chain, HR, someone is having a deep understanding of this function, plus a bit on the strategy part will be helpful in driving that, or driving that conversation, or doing that execution part. So that's from the acquisition perspective. Similarly, from a divestment is almost similar set of activities. In terms of the skill sets also, I think very similar. Domain expertise or functional expertise plus strategy expertise is something we look for. A decent understanding of financial knowledge is enough. We don't require that someone needs to have a deep understanding of the financial nitty-gritties or the valuation. That is not required in this M&A consulting, because that is either done by the investment banker or it is done by the big four in terms of the financial due diligence. So that's an overall M&A life cycle that I have. Just want to highlight one or two more things, like how we do from a strategic buyer to versus a financial buyer. So most of our projects either fall into either one of them, whether it's a PE firm, which is, the financial buyer, and if it's a corporate, in case they want to do a scale deal, scope deal, that is a strategic buyer. So the entire integration planning, separation planning depends on the type of buyer. In case it's a strategic buyer, mostly they will be interested for 3 to 5 years kind of horizon, and they want to optimize the target landscape, any improvement that we can identify, any cost reduction, any revenue improvement area, and the focus is mostly on EBITDA improvement, and then they want to exit after 4 to 5 years based on the time horizon. So how you approach the entire integration separation, will vary in case it's a private equity firm compared to a strategic buy, where obviously, the focus will be on, the cost reduction, the revenue synergies area, and not on that you optimize or you improve the EBITDA and just, leave. So based on the kind of deal, these two area varies. And if you see at the bottom, so whenever in the financial buyer or in case it's a private equity, generally they don't integrate it most of the time until sometimes they do in case they have a very similar company or a similar company in their portfolio. At that point of time, they want to integrate that. Otherwise, the private equity won't integrate with any other company, and it will be a standalone. But in case it's a strategic buyer, either it will be a bolt-on, or a full integration, based on the kind of acquisition. So this generally drives some of our areas, or the focus area that I discussed in the previous slide. And then I have also given a very high-level view of the various activities that we do. This is from a separation perspective, but it will be also applicable from an integration perspective. So if you see some of the steps that we have highlighted is so once the deal is announced, we need to prepare an integration or separation strategy. Mostly it will be 2 to 4 weeks kind of engagement. This is done by both the big four companies, the strategy firms, and so at this point of time, as an outcome of this, we will have a detailed operating model of the company going forward, be it acquisition or separation. Short exercise, 4 weeks, 4 to 6 weeks, or 2 weeks based on the size of the deal. Now, next is the separation planning. Now, from separation planning, generally the big fours or Accenture Strategy, plays a major role. The strategy firm, they do this work. When I say strategy, or I mean the pure play strategy, Bain, McKinsey, BCG, they do this work, but I've not seen, they're doing this or, getting this kind of work a lot. Generally it comes to, company like Accenture Strategy or the big fours. Now, this strategy planning, again, are long tail of activities, where we plan at a detailed level, function by function. And here, having a good understanding of at least 1 or 2 functional areas, be it your supply chain, HR, IT, becomes very handy. Because when you are doing this kind of planning without a functional expertise, it sometimes gets difficult to understand the processes and come out with it, or to align with the strategy that we have identified. And once this strategy is done, then the execution, and at this point of execution, we need to make sure that whatever strategy and separation planning we have done, the execution is aligned to those. Again, mostly this 3 to 6 months of separation execution will be doing the program management kind of activities, where we will manage, and we need to see is aligned to the overall strategy. And then the day one happens. Day one is when the two companies become one, or the one company is getting separated, and then the standalone implementation, which happens after day one, where we continue to create value, any other opportunities, any other integration separation that is left, which is not achieved by day one, it continues. Again, this is done primarily by big fours, Accenture Strategy, not by the strategy firm. Again, the skill set is mostly on managing the entire program management office and making sure it is aligned to the overall strategy. So this is mostly the the flow that we do in terms of the overall M&A consulting. I think I've created a high-level timeline just to show you, how the entire flow works. I think this I've just already discussed in the previous slide. So I think that's it about my entire presentation. Now happy to take any questions if anyone has any points or wants to understand or wants to make a career in M&A consulting or wants to understand the M&A consulting landscape also.
I think Mr. Radha can go ahead.
Okay, thanks. Thank you, Debashish. It was a really insightful session. Uh, I had a few questions around the M&A playbook. Am I audible?
Yeah, you're audible.
Okay. I have a few questions around the M&A playbook specifically. So when you say we use agile integration, we use the Pearl of Strings M&A strategy, and we use technology to shorten the duration, what technology do we refer to? I mean, what technology are we discussing we should implement when you're actually into the field? At which places can technology actually help, and what are those tools which we should use? And second, to do a pearl of string, how do you integrate it very fast? I mean, at times, for a smaller company which is probably 50 million, $100 million in top line, it becomes really difficult if they acquire 5 million company every 6 months and integrate it. It becomes very difficult. So how do you do that? And if you have to consult somebody on this particular topic, what would be your suggestion?
Yeah. Mridul, a bit about your background. So you didn't mention about your background. So if you
Sorry,
can just
I am currently working with a smaller IT organization itself in the corp dev team. So we are facing this challenge. I am so my founder is an alumni to IIM, and he suggested I should attend this seminar. So I'm working with InfoBeans Technologies in their corp dev team.
Okay. And you're planning to, or your company is planning to do an acquisition, or planning to do a set of acquisition in the future, and you're planning to set up your environment.
Yes, so we want to create an engine which can, quickly acquire small companies where you find some very interesting AI companies, data analytic companies, or probably some companies where you are finding it interesting in the industry, from the industry perspective, vertical perspective. That you sometimes finds very small companies, but the challenges to integrate it is still large. I mean, we still face the similar challenges to integrate a larger company versus a smaller company. It does not matter much in terms of the timeline and effort. So what technology, what thought process we should implement so that we can create a better fueled engine and oiled engine?
Okay, understood. So so first step will be here. So based on the size of the company or the thesis of the deal, generally the first step in the playbook is identify the functions that you either want to integrate or want to keep it separate, right? So some of the functions, like in case it's a very small company, not a very big one, or if in case it's very niche company, be it like AI or in any other blockchain or like any other niche company, generally the first step, as I said, will be identify the functions that you want to integrate. So we have a playbook which is just an Excel in that case, where you put those parameters like the deal thesis, the size of the company, what is your acquisition strategy, and based on that, and the revenue of the company or the acquired company, the revenue of your company. So based on that, first it gives you at a high level view, okay, like the back office functions, probably the HR, or the finance, etc. You integrate, but the core functions, or your R&D functions, your the product development functions, etc. That you definitely in most of the cases we have seen is you keep it separate, at least for immediate future, probably 3 to 6 months kind of thing, and that might vary. So that will be the first step, right?
Okay.
Like you identify which functions to integrate, which functions not to integrate, and when to integrate the rest of the function. Is when I say not to integrate, is not that you won't integrate in the future also. You might integrate after 6 months, you might integrate after 2 years, but might not be immediately. So that's the first step. The second step is like in terms of like whether you want to integrate it right now or after 6 months. how you going to make sure that your lead time, or which you was referring sometimes agile or technology, is ready from your side so that the acquisition becomes smooth. So some of the technologies or some of the landscape that we suggest as part of this entire integration or not integration, or probably setting up the M&A capability of the acquiring company is you make the entire landscape SOA based, service oriented, so that the plugging a new company becomes easier. So how you do a service oriented based architecture is you go to the cloud, you try to leverage cloud as much as possible, very less dependencies on on-premise, so you need to make sure that all your like, even if you're going to in a cloud, all your applications are SaaS based. Those applications are can be easily plugged or compatible with the various APIs that is standard across the industries. So by doing this, leveraging cloud, leveraging SaaS based technologies, having an operating model which is mostly outsourced, don't keep it in-house, so your technology team can be outsourced. So based on the need, you can easily increase or ask for more resources, or probably if you want to divest, you can ask your technology vendor to reduce that. So doing that, some of these activities, you can keep your landscape ready to optimize whenever you are doing an acquisition. So this will be the second step that we do from an quicker acquisition or to create an M&A environment. So these are a couple of steps that we suggest.
Got it. Thank you, Debasish.
Are there any more questions? You can also put it in the chat box if you want. Okay, so I'm assuming no more questions. So with that, we come to an end with this session. Mr. Sarkar, thank you very much for shedding light on the critical aspects of transformational mergers and acquisitions. Your talk was quite engaging and definitely expanded our knowledge. Wishing you the very best for your future, and thank you so much. And we would also like to thank all the participants for taking out the time to join the talk. And finally, this talk would be published on the Institute's YouTube channel for a larger audience. Thank you so much, sir. Thank you.
Thank you.